What are the latest changes to FUTA tax? Are you a small business owner wondering about the latest updates to federal unemployment tax? You're in the right spot. Let's break down what you need to know. The Federal Unemployment Tax Act tax has a standard rate of 6% applied to the first $7,000 of each employee's wages. Most employers can receive a credit reduction of 5.4% if they have paid their state unemployment taxes fully and on time. This effectively lowers the FUTA tax rate to 0.6%, resulting in a maximum tax of $42 per employee annually. Now, let's talk about the latest changes for the year 2025. One significant update is that some states have outstanding federal loan balances used to fund their unemployment insurance programs. If a state has not repaid these federal advances on time, it becomes a credit reduction state. This status means employers in those states will face a higher FUTA tax rate. For 2025, states like California, Connecticut, and New York may have increased FUTA tax rates due to these outstanding federal loans. If you're in one of these states, it's essential to prepare for higher FUTA tax liabilities. Another point to note is that the FUTA tax wage base remains unchanged at $7,000 per employee for 2025. This means the tax only applies to the first $7,000 of wages paid to each employee annually. This wage base has been stable since 1983. Employers must continue to file and pay FUTA taxes quarterly, with deadlines on January 31st, April 30th, July 31st, and October 31st. It's also important to remember that FUTA tax does not apply to independent contractors or self-employed individuals. The tax only applies to wages paid to employees. Looking ahead, while the FUTA wage base and rate have been stable, Congress has the authority to modify these amounts. It's wise for employers to keep an eye on legislative developments that could affect FUTA tax obligations. For small business employers, it's vital to verify your state's status regarding federal loan repayments. This will help you determine if you face a credit reduction and a higher FUTA tax rate. Accurate tracking of each employee's wages up to the $7,000 FUTA wage base is essential to avoid overpayment. Timely payment of state unemployment taxes is critical to maintain eligibility for the 5.4% FUTA credit. Lastly, ensure your payroll systems reflected any credit reduction rates applicable to your state for correct FUTA tax withholding and payment. Overall, while the core structure of FUTA tax remains consistent, small business owners in certain states should anticipate increased FUTA tax liabilities in 2025 due to credit reductions. Staying informed and adjusting your payroll tax processes accordingly is key to compliance and accurate tax forecasting.